But let's focus on Whirlpool, and today we thought we're going to chat with the management of Whirlpool, get in a sense of what the sales growth is, what do they expect from the festive season, what's their capex plan, the e-commerce growth plans, all of it, and what really is the pipeline looking like for the next 5 years. Sunil D'souza, the managing director at Whirlpool India, joins us on the show right now. Sunil, hi, afternoon. Thanks so much for joining in. You effected a price increase of 2% in mid-July in line with the industry, that is, to pass on GST rate differential. Tell us how you dealt with GST transition, and are there any more price hikes in the offing for you?
So let me put it this way. Pricing is a factor of your product, your execution, your commodity and your currency cost. We have seen commodities creep up a bit sometime end of last year, about November, December. They went to a high and they sort of about stabilized at a level come May, June sort of thing. But also due to the differential tax that was there was about 1.5 to 2% on the impact on durables. Industry did take this pricing, and mid-July we have also taken the pricing. Going forward, we will ensure that we are competitive in the market, launching products which provide value to the Indian consumer, making sure our product features, benefits are in line with the pricing. But pricing itself is a factor of multiple things which impact, including inflation, commodities and currencies. That is a fine balance that you have to walk always. I think the team has pulled it off very well over the past about 18-24 months when we've seen volatility come in. I wouldn't hazard a guess on pricing going forward. Yes, there was a GST transition pricing impact. Going forward, we will make sure that we are in line with commodity currencies, and the focus is the consumer, making sure that we're providing the best value.
Right. Your company has been prudent in the amount of cash being put away and kept sufficient ammunition for growth plans as well. So how much is the cash on books, and what are the near-term growth plans and capex that you may have lined up?
The cash lying with the company belongs to the shareholders, and we've got to make sure that we provide the best value to the shareholders for the cash that we've been entrusted with. There are multiple uses of the cash that we can do. We can do a buyback and drive up the share price. We can pay out dividends, putting more cash in the hands of the shareholders. But we can also deploy it for growth, and growth both organic and inorganic. Right now, we see opportunities for growth going forward. We had about 1,300 crores of cash as of end of March in our end of June in our balance sheet. Out of that, we've deployed some cash to make sure that in a declining interest regime, we are parking the cash to provide better returns than a standard bank deposit to the shareholders, as well as making sure that we've got enough cash in our books, to fund our capacity and innovation plans going forward. At the same time, if and when an opportunity comes up in terms of inorganic growth, we do have the ammunition to utilize.
Sunil, I have to ask you, what kind of growth are you seeing via the e-commerce platforms like Amazon and Flipkart? And want to also understand how much is the percentage of total sales that come in from e-commerce, and will you beef up your exposure here?
Okay, before we get into online and offline, I would like to say that we are seeing good growth on the horizon going ahead. As long as the GDP continues above 7%, we see discretionary spends going up, and therefore demand for durables going up. India is a low penetrated market, so we'll see growth at the penetration end, the mass end of the spectrum, as well as when people's lifestyles get better, we'll see growth at the premium ends of the spectrum. So therefore, we see growth both in offline and online. Yes, online is bringing a new way to the consumers where they can shop the world at their fingertips, and we do see online growth outpacing offline. Now, online itself was about 3% of our turnover, but we see very, very significant growths on this. We're doing two things. Number one, we've created a flagship store online where our entire range is available to consumers, and we're backing it up with very efficient delivery and service. Other than that, we're partnering with the big guys to make sure that as they grow in scale, we partner and grow with them.
Great. We also understand that you would be expanding across product lines in the next 5 years. Tell us, what's the product pipeline like?
Our base business is refrigerators and washers. About 80% of our turnover today comes from refrigerators and washers. But we've got a very strong brand, we've got a very strong distribution network and a service network to back us up if we need to expand into other categories. The critical thing is to make sure that we're expanding to adjacent categories where we can leverage our infrastructure and make sure it provides incremental value to the shareholders. And therefore, we have focused on 3 categories: aircon, water and cooking. The objective is that we will continue to grow these categories at 2 times the base. Now, the base itself, we expect to grow significantly. As I mentioned, we see growth on the horizon as GDP grows, discretionary spends grow. We are making sure that we've got a full pipeline of products on the base, providing both innovation, technology and at the right value to the Indian consumer, as well as making sure we get into these adjacent spaces and create our niche.
Sunil, such a pleasure having you today on the show, and thanks so much for taking the time out and joining us and really explaining what's going on with Whirlpool, where you find opportunity when it comes to online platforms and what you intend to do with all that cash on the books right now.